Global stock markets are rallying, with the UK's FTSE 100 index currently up around about 68 points. The DAX in Germany up around about 168 points. And the Euro Stoxx 50 index currently up around about 45 points. Overnight on Wall Street, both the Dow and the S&P rallied. Asian markets have also done pretty well in the currency space. The dollar is the standout winner against its rivals. Core government bonds are trading lower as expected. Gold is off around about $22. It's risk on all the way today, and that's after the Federal Reserve finally pulled the trigger on tapering its bond buying program. Good morning, I'm Ishaq Siddiqi, and welcome to your daily market buy. I'm going to give you guys a quick roundup of what's been going on, and it's the news that everybody's been waiting for, really. It's the Federal Reserve's first initiation of the tapering process of its bond buying program. The QE program, as it's widely known, in which the Federal Reserve buys £85 billion worth of dollars of bonds on a monthly basis. Now they've scaled that back by $10 billion, cutting it down to $75 billion. It's a modest reduction of the pace of QE. The Fed is now targeting a wider reduction when the unemployment level drops to a more comfortable level, somewhere around 6.5%. They also believe that inflation in 2014 will also creep up to 2%, the target that they have in mind for inflation. So the Fed is obviously certainly a lot more resolved about what's going on in the US economy. When taken together, the US economy has improved over the last 3 months, and the Fed, we know, decided to hold off on tapering in October, given the fact that we had a number of headwinds in the way, particularly the situation in the US when it comes to the budget. But that's been cleared now, and recently we've also had a budget deal that will avert the government shutdown in 2014. Although there still is a sticky issue of raising the debt ceiling, which needs to be discussed. But having said all that, the labour market has improved considerably. The last payrolls report for the month of November was a stunning number, where the employment rate fell to 7%, and we saw over 200,000 jobs created by the US economy at the same time. Consumer, business, manufacturing, and housing indicators have all been much better than expected. So the Fed is far more comfortable about where the US economy is going, and I think the market is too. At the same time, when you take it as Ben Bernanke's last policy meeting or penultimate policy meeting, it's quite clear that Ben Bernanke wanted to go out with a big bang. It was his time to get the ball rolling. This QE program is essentially his baby. Its inception back in 2009 has seen the Fed inflate its balance sheet by around about $4 trillion. So it seems like Mr. Bernanke wanted to just signal the start to the end of what he created, and investors have actually shared it. They've been relatively pleased by the results so far, and I think that's mostly because it's been baked into the price. People have been expecting QE for some time now, tapering of QE for some time now, rather. And the more surprising result was the response by the emerging market space, which actually performed relatively well over the past session, and Asian shares have tracked higher, and that's because they're better prepared for it. So on the whole, when you take it as the move by the Fed, it seems to be a relatively responsible and sensible move by the Federal Reserve to start exiting before the end of 2013. So 2014 has more of a better framework in mind, and we know where the US monetary policy is going for 2014 onwards. At the same time, we have to remember that the Fed has reaffirmed that they will keep interest rates low for an extended period, which should help the reduction of capital outflows from the emerging market space. It should keep things rather steady in 2014. So on the whole, pretty good result, and we've taken that positively in Europe. Of course, the Fed will probably have to adjust its forward guidance measures in 2014 when Mrs. Yellen comes in place, but that's not for a couple of months now, well, at least 2 months now before we have to think about that. So going into the end of 2013, the Fed's move has finally seen the Santa rally begin, which was pretty much anticipated across the board that after the Fed will make their decision, we will start seeing the balls back in play, and that's exactly what's happening today. Later on in the session, we've got some stuff to deal with. UK retail sales, watch out for those. But in the US, of course, we have the Philly Fed, jobless claims, and existing home sales, all to keep a track of, and that's out this afternoon. Tomorrow, we have US third quarter GDP figures, which will be heavily scrutinized, given the fact that the Fed believes that the US economy is improving, so that data would have to back that up. That is all for your daily market bite. Tune in for another one tomorrow. Thanks for watching.